Hello, this is Tom Cloud, and this is an update I'm doing for SRS Rocco and Steve St. Angelo. We haven't done one in a few weeks. We had so much going on with the Fed's meeting coming up, the election of President-elect Trump, and all the things that were also going on in India, what was going on in China. We had so much going on in the precious metals market, I wanted to wait till the dust kind of settled and things slowed down to come back and give you where I think everything is. I want to start with the Federal Reserve meeting last week. When the meeting was over is what shocked, and the interview with Yellen after the meeting is what shocked the markets. It sent everything down, stocks, gold, bonds, every investment was shocked with the announcement. While everything else had already been factored in, we felt we knew that the market had already all the markets were already where they should be, factoring in a 25 basis point increase in interest rates. But what we didn't factor in is what she was going to say after the announcement they were raising rates, is that she was going to start reliquifying the Federal Reserve's portfolio of bonds. What this means is nobody in the world wants our bonds, and including the Fed. But they want to put them in the market, even if they're discounted. They want to put them in there, which will squeeze the liquidity out of a Trump-based economy and the growth. And this just as it filtered through people's brains, because we know that Trump may or may not keep her. Many people think he'll replace her as quickly as he possibly can, and she doesn't want to leave with the kind of debt she's acquired as being the head of the Federal Reserve, the president-appointed employee. Remember, she is, along with Fisher, the only ones that get a check from the government. Everybody else that works for the Federal Reserve is a private company. So this could be devastating if they start liquidating bonds into the marketplace and taking whatever they bring at auction, which could be a devastation to the economy, the liquidity. So you've got to look at what is said and not what you think, because Trump's going in. We're going to have happy days again. We're going to have debt that you can't comprehend. It's going to make the first 2 years of debt under Trump make Obama's look little. But we're willing as consumers and citizens to say that's okay, because we're going to help the infrastructure, the VA, we're going to build up the military. So we're willing to go further in debt till this and cuts the corporate rate, go further in debt to start with the first 2 years, and then hope that the tax base has grown so much that we'll start cutting the deficit. That is, that's what Trump, he believes in debt. I mean, he built his multi-billion-dollar inventory of properties with debt. So he doesn't mind going in debt. So it could work out very positively. But let me run through some of the emails I've received from you. The first is about Deutsche Bank and the lawsuit in the federal court in New York, where they've now admitted and turned over 85 audio tapes that shows the price fixing on the silver market. And these suits are going to be settled. And the people that file the suits, the plaintiffs, are going to win and are winning as these suits are being settled. And all I can tell you is it's going to be a lot harder for a trader, all these big banks. There's over 100 new banks and brokerage companies that have come out that were helping manipulate the gold and silver markets that these lawsuits were filed for. And now we see them as reality, and we see that this could be the problem that sends the whole world into a stock market crash. Even though you're thinking how great it's going to be with Trump, the events that could send it are Deutsche Bank, a domino effect of these banks, including many banks in America that are tied to this, and just see the dominoes fall. It's a real possibility. I'm not saying it's going to happen for sure, but what I can tell you is going to be a lot less people willing to go in there and manipulate these contracts with naked shorts than there are right now. And this is great for us as investors in gold and silver as part of our portfolio. So we'll continue to follow this Deutsche Bank story. It's in the federal court, but I can assure you this is going our way for the people that own gold and silver and won't own gold and silver. This is going our way. The next thing is I got several emails about the premiums soaring in China. Yes, we've seen the place where you can buy physical gold and silver in China that opened back last April with premiums going straight up. Remember, if you're anywhere in the world right now except the United States, gold and silver is soaring because the dollar has gone up over 5.5% since Trump was elected. Ordinarily, you would expect the gold to drop 50%, not 15% that has dropped. Because remember, the rule of thumb is 10% up or down for gold and silver for every 1% up or down in the dollar. So we're still up 9%, even though the dollar is now up about 2 or 3% for the year. You'd expect gold and silver to be down 30%, not up 9%. That shows you the strength in the physical market worldwide. Because remember, every country in the world except the United States, gold and silver is up in their currency. And it'll be that way in the U.S. dollar soon. I can't tell you how much higher the dollar is going, but the higher it goes, the worse our economy is going to be, because companies cannot manufacture goods and sell them with an escalating dollar. We don't want a strong dollar. Trump doesn't want a strong dollar. Americans don't want a strong dollar. Nobody wants a strong dollar. And we will not have a strong dollar soon, because what's driving it now are foreign investors parking their money in U.S. securities on the short term. So yes, premiums are soaring in China and India and other parts of the world. Number three, I was asked about the U.S. running out. Yes, the U.S. quit selling 2016s in gold and silver products. They're completely out. It will be about the third week of January before we have 2017 gold and silver U.S. Eagles for sale. So it's a little misleading to say they've sold out. Certainly we can still get them. They're just not dated 2016. So I wouldn't worry too much about that. And now the special drawing rights, we finally know a little bit more about China than we did. We heard finally on November 19th, there was a Bloomberg story that said that China had increased their gold 57% since the 2009 record. It didn't come out and tell you they had 4,500 ounces. Many people thought they would have over 8,163 tons like the U.S. purportedly has, but now they've only shown enough to get their SDRs. We know they have more than that, but we don't know how much more than that. So right now, we've got a new bottom line up now to 4,500 to 5,000 tons that we know China has, because they passed an audit to get their special drawing rights with the International Monetary Fund, or the IMF as you know it. So we'll be following that story, continually follow it closely, because we don't think China will announce the rest of their gold holdings until they get as much as they want. And then they'll come in and probably have some kind of currency backed by gold. So you want to keep accumulating it, even though the price has had a tremendous year. I mean, it's up 9%. That's not bad investment. It was up 24% before the election. So it has dropped 15%. I don't know a lower risk investment right now than gold and silver. I mean, really. You've got to look at the mining cost and the dollar's height, where it is right now, and know it might go a little bit higher, but not much higher. So watch the SDRs. When China's ready, they'll let the world know how much gold they have that is not in the audit that was done to get their special drawing rights. We also had a shocking announcement since we talked last, and that is, it's now estimated there's only 1 billion ounces of gold left. And at current consumption and coming out about 100 million ounces a year, we're looking at 10 years. This is the first time we've had an end number for when gold will probably be depleted from the Earth's crust, and there'll be no more except gold that is so deep is not mineable at a profit. So isn't it good to know that any other investment you have has unlimited quantities? Because it's paper. It's not real. It's a mirage. Isn't it nice to know that you've got a product in your portfolio, gold and silver, that silver could be completely depleted in 5 to 7 years based on what I've already told you today, and gold in 10 years. I mean, people, there's no better place to put money for your heirs and your grandchildren's education and trust and everything you can do that almost guarantees your heirs a tremendous profit in these two metals. Forget about what's going to do the next 3 months. Who cares? I care about what it's going to do into the future of my children and grandchildren. And that's what you've got to look at. But we've got an end table in line to these investments as far as what is known to exist below ground, with silver supply running out in 5 to 7 years and gold in 10 years or less, depending on the volume. So certainly that's been a shocking number that's come out. The Sharia law, man oh man. On November 19th, the Sharia law through the Islamic Accounting Foundation is now allowing anybody that practices Sharia law over 1/4 of the world's population, 1.5 billion, to now own. Now, to start with, it's not going to be physical gold and silver. It's going to be ETFs. It looks like it's what has been worked out. And you know my feelings about ETFs. If you don't, give me a call and we'll discuss it, because it's not real gold. It's paper gold. You can't take gold for delivery. You can only cash in. So it is a convenient product, but it's not pure gold, where the Sharia law will start that way. And we're hopeful through the further negotiations that the citizens of the world that practice Sharia law can own physical metal at some time in not the too distant future. So they will have an effect on gold immediately starting the first of the year. And you've got to watch that, because once again, there's 1/4 of the world that has never been able to own gold and silver that can now own it, even though it is going to be through a security. India gold and silver, a lot of writing about it. You heard about the raids of citizens' homes about a month ago, 3 weeks ago. But remember what they were going in and getting. If you bought gold in the black market and you didn't have a invoice showing that a 6% tax was paid to the Indian government, they had the right to confiscate it. If you bought it properly, it wasn't confiscated. A lot of people got bad information on that. But here's the main thing. It now looks like Indian citizens favor silver for the first time in their history. Remember, they are the biggest consuming nation for private consumption in the world for gold. Now they can buy silver without the 6% tax. And if they start buying it, they already have. But if they start buying it in the same dollar amount or rupee amount, then you're talking about silver could be gone in 2 or 3 years, between the Chinese pledging to have solar panels and they're over half their homes in 5 years. And now we see this, it easily could be completely gone as Indians move their money into silver in place of gold. And this is going to happen. It's just how quick and how much effect. The other factor is, yes, silver's back below mining cost. That's only happened about 5 times in history. So you can know that silver's not going to stay below mining cost very long, maybe a few months. So it is an incredible time for you to be buying silver when you're looking at people talking about $50 and $100 silver off these 3 or 4 things I've just given you that are going to happen in the near future. So everything is going our way, and once again, the stock market, while is a great place to have part of your portfolio, it's not wrong to be euphoric over Trump coming in, but I can tell you there are some mines out there they could step on and blow this market up. It's not as certain as people have you to believe that the stock market is going to continue up, because it's up about 19 or 20 times earnings after the jump, since it's way overpriced. It doesn't mean it can get further overpriced. I'm not saying that, but I'm saying that you should look at it as part of your portfolio, because still the greatest investment advice ever put out there was back in Ecclesiastes 11:2, when it said, Solomon said, divide your wealth 7 or 8 ways, because no man knows what disaster will come upon the land. So certainly you do need to have different things in your portfolio. But I can tell you one thing, I'm allocating more to metals and not less with Trump going in, because he is going to go further in debt, and we're going to see all these things we talked about today in China, Russia, India, and the Sharia world. All these things are big and positive for us in the metals business. You know about our storage program. If you don't, you can contact us, where we've got the lowest storage rates in the world. And as Steve can tell you and has said on many interviews, we have the lowest round trip. There's been other people to confirm that. The cost of getting in, the cost of getting out, the cost of storage. When we're talking about 20 basis points for gold and silver, there's no one even close in the gold and silver industry. So give us a call at 800-247-2812. Once again, it's 800-247-2812. And you can talk to myself or Dan. He's been with me 22, 23 years. You can talk to Kathleen. He's been with me 6 years. And they can help answer your questions. But we are very excited about 2017, because remember, 2016 has been a darn good year. We're up right at 10% in gold and silver, a double-digit return for the year based on where we are today. And we look for much greater things next year. So hopefully we can, get caught up. So give us a call. Until next time, this is Tom Cloud signing out.